Ever felt like your money could be working harder for you? What if I told you there is a strategy that turns global economic differences into your personal financial advantage? This isn't just about finding cheaper vacation spots. We're talking about geo-arbitrage investing, a powerful method for growing your wealth by leveraging markets across the globe. Let's break down what that really means. Geo-arbitrage isn't just a buzzword for digital nomads. It's a sophisticated investment strategy. Imagine your $1, when invested in a different country, could generate returns equivalent to $10 back home. It sounds incredible, but it's based on solid economic principles. At its core, this strategy capitalizes on economic imbalances. We're talking about things like purchasing power, parity, which is the idea that the same goods should cost the same everywhere, but in reality, they don't. And we're also looking at interest rate difference, where different countries offer vastly different returns on capital. These imbalances create opportunities for savvy investors to profit. So, where do you find these golden opportunities? The key is to look for arbitrage hotspots. We're often talking about emerging markets with massive growth potential. Think about regions like Southeast Asia or parts of Latin America. These are places where rapid economic development often signals that asset values are about to climb. You want to pinpoint economies that are on an upward trajectory. One of the most tangible ways to invest is through real estate and infrastructure. Imagine buying property in a developing city just before a major infrastructure project, like a new subway line or airport, is completed. The value of that property could skyrocket. The trick is to identify undervalued assets in economies that are poised for significant appreciation. Of course, you can't ignore the currency. Navigating the world of foreign exchange can be tricky. You need to look for currencies that are not only favorable now, but also have a stable long-term outlook. You don't want your investment gains to be wiped out by a sudden currency devaluation. Once you've found your hotspot, how do you actually put your money to work? This is where strategic deployment comes in. You have a few options. You could go for direct investment, meaning you buy and own the asset yourself. This gives you full control, but it can be complex. The alternative is to form local partnerships. Teaming up with someone who has on-the-ground expertise can help you navigate the local market, culture, and bureaucracy much more effectively. They can open doors that would otherwise be closed. A crucial rule in any investment strategy is diversification, and it's even more important when you're investing globally. Don't put all your capital in one country or one type of asset. By spreading your investments across different geographies and sectors, you mitigate risk. If one market underperforms, your other investments can balance it out. And please, don't skip the boring but essential part. Due diligence. You must understand the local laws, tax regulations, and rules about taking your money out of the country, known as repatriation policies. Overlooking these legal and regulatory hurdles can lead to very expensive surprises down the road. Let's say your investment has paid off handsomely. How do you bring that wealth back home? This process is called repatriating your returns, and it requires its own strategy. First, you need to optimize currency exchange. You don't want to lose a chunk of your profits to unfavorable exchange rates. This means timing your conversions and using services that offer the best rates. You might even use financial instruments to hedge against currency fluctuations. Then there are the tax implications. This is where things can get complicated. But with smart structuring, you can legally minimize your tax burden. ULL need to understand international tax treaties between your home country and the country you've invested in. It is often wise to consult with a tax professional who specializes in international finance to make sure your investments are structured in the most tax-efficient way possible. But here's a powerful idea. Instead of just bringing all the profits home, consider reinvesting them. You can use your foreign gains to fuel even more growth, either in the same market or by expanding into new ones. Or you can bring the profits back and integrate them into your domestic portfolio. This creates a powerful cycle of accelerated growth, allowing you to build wealth exponentially. Feeling inspired to create your own global wealth blueprint? Here are your next steps. You don't need a fortune to start. Begin with small, manageable investments. This allows you to learn the ropes without taking on too much risk. As you gain experience and confidence, you can gradually scale up and expand your global reach. Think of it as testing the waters before diving in. In today's world, technology is your best friend. There are numerous online platforms that can help you research markets, find investment opportunities, and manage your portfolio. But don't underestimate the power of human connection. Build a network of experts, lawyers, accountants, and financial advisors who specialize in international investing. Their guidance can be invaluable. Finally, cultivating the right mindset is key. The world of global investing is constantly changing. Markets shift, regulations evolve, and new opportunities emerge. You need to adopt a long-term vision and commit to continuous learning and adaptation. Staying curious, informed, and flexible will be your greatest assets on this journey. By thinking globally, you can unlock a new level of financial freedom and build lasting wealth right from your local base. Thank you so much for watching. If you found this helpful, be sure to like, subscribe, and hit that notification bell for more insights into building your wealth. See you in the next video.